So hello traders, welcome to my YouTube channel. It's Liam Winger, and unusual for you to see me in the background like this, but welcome to my YouTube channel anyway. And right now I'm just on a walk and yeah, just sort of getting away from the chart so I can sort of refresh my mind as well, so when I go back onto the charts everything will be a lot clearer. And also want to emphasize the importance of that, because if you're spending all day on the charts, think about how your psychology is affected. You're not getting that refresh of mind often, which therefore will lead to you slipping and making decisions which you would have otherwise not made if you had been taking those regular breaks. And just look at this, the nature, the lakes, all the tranquility that you experience being away from the chart, outside in the nature, getting fresh air as well. So yeah, that's important, and I wanted to just emphasize that point. Now also I wanted to go over a point and something that I've been experiencing lately. Well, not really experiencing, but like I've been seeing it happen lately, which is about doubt and self-doubt and self-sabotage. I've been watching a few videos on that just to try and inform myself on this topic as much as possible. And it's where you're doubting yourself and then you think that things aren't possible just because your circumstances have become better. So for example, you start reaching that 5% a month goal and then you think that's not possible for you to become a successful trader. Well, hang on, have you those trades where you made 5%, why all of a sudden are you trying to self-sabotage and doubting yourself when you've done all your analysis, you've done all your back testing, you've done all your forecasting, you've done literally everything in your ability to make things possible? Then you start doubting yourself. Now I just want to run over a quick story of the first time I almost doubted myself, and this was actually the point where I said no more listening to anyone else. When I wanted to open a long position on dollar CAD, and I did so, risking 1% as usual, and then someone said to me, don't buy the dollar, and I was like, why? Then they were like, everyone was posting these screenshots of news and reasons why I shouldn't buy the dollar, but nonetheless I stuck to my long positions on dollar CAD. And what happened next? 350 pips in my favor. So what does that teach you? If you're back tested, like for example I've been back testing dollar CAD, I know the ins and outs, obviously not 100% because I'm not a perfect trader and nobody is, and that's also a point in itself, but not for now of course. But no one's a perfect trader, but you have an edge over the market. You're back tested, you've seen the results that dollar CAD can bring you in the strategy you're trading, so why would you try and doubt yourself? So that's just a quick point on self-doubt. So if you're having any problems with doubt, just don't doubt yourself. And also just want to also emphasize the point of, wait, I already have, just basically get away from the charts, take a break. No need to be spending all the hours of your day on the charts. Take regular breaks, take regular rests, so that it refreshes your mind. So right now we're probably gonna head home, been out for maybe an hour or maybe even past 1 hour, but we're heading home now, and I'm gonna meet you guys back on the charts in a bit. So I hope you've enjoyed a bit of that motivation. So yeah, not much left really. You can see the woods behind me, and actually this lighting's quite good for a photo too, so I probably will take a photo here afterwards. But yeah, I'll meet you guys on the charts. So hello traders, and welcome back to the video. This is just a continuation from the main part of the video. So we came back from a walk at around 1:30. Right now we came back from the walk at around 5 and 5:46 I did the update, and right now it's 10 past 6. So I'll do like a sort of 10-minute trade recap of trades which I've took, things which I've learned and journaled as well. So just sort of progress this week. It's been, yeah, it hasn't been the best week. Definitely missed last week. Last week we had a very, very good week. Taking some trades with almost 10% on each trade. We took about 3 trades like that. So yeah, right now we're gonna just do a quick trade recap. So you can see here we've got Euro Kiwi open, and we got stopped out for 0.5% right here just a few hours ago. This was while I was on the walk, I believe. Yep, this was while I was on the walk. And yeah, I'm happy with the risk management here. like, we're just going to zoom out to that. We'll hide this and we'll zoom out to the higher structure and see, has anything changed structurally here? Guys, has anything changed structurally here? No, absolutely not. The structure still remains valid, and right now all I'm waiting for is just a little bit of a move up here till we get a rejection, maybe come back to retest these lows, but the overall move is still up, and that's from a 4-hour point of view. That is my view for Euro Kiwi on the 4-hour. Now if we zoom out to the daily as well, nothing interesting. We're just still watching for this structure here which has been forming. This is sort of longer term structure, and then we still have the threat of this one here as well, which should align perfectly. Yes, we got that perfectly. So we'll zoom out to the, actually hang on, we'll make these visible on the weekly and monthly time frame. Then we'll go up to the monthly time frame, I think, and then we can take a look at that. So yeah, right now we'll just head to the monthly time frame. And since I'm lazy, I'll use the keyboard way. So yeah, you can see here structurally this just looks like a bigger correction following the 08/09 crash. You can see here 2008-2009 crash. This just looks like a big correction to be held accountable after that. So you can see from a structure point of view, in the near future we can expect Euro Kiwi to come down to the 1.39 level. Now it's definitely something, a long-term idea, but it's something which we could see happen right now. You can see here what we're forming. You can see the sharp rejection which we had from this level. We also had it here. Actually, I'll just circle these so it's clear. You can see the sharp rejection which was in place here, here, and then also here. So you can tell this level is a serious area of value in the market, and we have no reason to doubt why this will stop being respected even if we come here a second time. Now something caught my eye, so I am cool. So overall, where could we see Euro Kiwi go? We could see a hover around this level, so price could just hover a little bit, and then we see the first impulsive move. A little bit of a hover. But overall, my bias still remains bearish on Euro Kiwi. And there is a possibility that we could have some great bullish momentum building to the upside. This thing could just rocket to the upside. We saw this on dollar CAD as well. I'm not going to open up dollar CAD now, but you are probably aware we had the double top, and now price is just selling off from this level. So this is as far as higher time frame structure on Euro Kiwi goes. So structurally, nothing has still changed. We still have that short bias, but on these intraday time frames, I think price could come. This level is an area of value, and we could see some sell-offs from there, even to make a double bottom. Price could turn out bullish, or we could just follow the weekly time frame setup, which is down to these levels. Now that's as far as Euro Kiwi goes. We managed to lock, and if I actually open up the object tree and make this visible again, we locked in 0.5%. Now, to you, that might not be a lot, and it might not be. That might be right, but at the end of the day, we're still happy with the result and risk management, as there was no way I was going to lose on this trade after price had went in our favor for 2.5%, I believe. So there's no way I was going to lose on this trade. So I wanted to be safe and bank 0.5%. And you'll see why I decided to actually bank some profit early. And next we have natural gas. I'm still currently long natural gas, looking very good. From the 1.562 level, just trading the range and the breakout of this structure. Now from this level, this could act as just a deeper flag. You can see structure-wise, impulse, correction, impulse, correction, impulse. And now price is just trading in this as a bigger correction. Now this could lead to an impulse back to the downside. Well, not really back to the downside, but we could see price come back to the downside. And that is definitely a likelier scenario than the move back to the upside. So we can draw on structure here, and yeah, it's just good practice to make sure you're aware of different possibilities. So you can see here we had the sell-off, and price actually did end up coming. If we just zoom in a little bit from a structure-wise point of view, we've seen these patterns in the market, and it's typical that price comes to fill the bottom of the structure, of the start of the structure. And you can see we had this sort of wedge pattern, which price was being compressed like this. You can see price was being compressed between these two lines. So when price broke out and we had this little small correction, which is what we're seeing on pound Aussie now on the weekly time frame, we then got the sell-off to fill this low. You can see we eventually got that filled. So natural gas, big bull on natural gas, especially on the weekly time frame. We can just back out to higher time frame. What can we see? Price looks to have double bottomed at this area. So natural gas can be heading for a big bull run, and I actually have done a video about this. This looks to be intraday, however you call it. This could be an intraday double bottom, and price could just shoot up from here, and we're not going to miss that move. So that's it as far as natural gas goes. Let's take a look at Aussie dollar. Aussie dollar, again, same thing. We locked in 0.5 and we got stopped out here. I started to lock in as we reached this previous low. It didn't look like price was going to break this low, but eventually we did, and look what happened. Price went to fill this pattern, the beginning of structure on this pattern, which is always expected, and we expect at least 90% of the move to be filled. So from here, that trade, that move has already been valid from these areas. You can see here, price was just halted at these levels, and then finally we got a move, and price actually did break a bit. So Aussie dollar, again, short as hell on this pair. You can see from a structure-wise point of view, nothing has changed as well. Price just looks to be ranging. You can see we're constantly making lower highs and lower lows as well. So overall bias, this level is a short-term target if we're looking for shorts. And we look for price to either make a double bottom there or even break this level entirely to fill this trend line bottom. So Aussie dollar looking very good. Euro dollar, same thing, stopped out for 0.5. And this is all about risk management. How am I going to let a trade that is running 1.5%? 1.5%, you can see he was running 1.5% at one point. Why do I want to let that hit my stop loss and lose 1%? That's 2.5% I watched go out of my trading account. So I was playing it quite aggressive. You could call it aggressive, and locking in 0.5 right here as we got the impulse to break this structure. And now what can we do? We can just evolve this, and structure hasn't changed at all. We actually even fulfilled this bottom here. So structure-wise, euro dollar, I'm a big bull on euro dollar. And yeah, US oil as well, same thing. We banked in 0.5, and then we just got wiped out straight away. And price did end up filling 90% of the move. You can see we had this bigger corrective structure, higher lows and lower highs. And then we got the breakout to fill. You can see this is, if I actually draw this straighter, this is the overall structure. the beginning of structure, which is where we look to target. 90% of that was filled here, so that's also nice for us to see. So as far as charts go, that's pretty much it. We also have a position on CAD yen. CAD yen is just staying hovering in our position a little bit, and this could be a scale in, but I'm not going to take the scale in, and the reasons why I'm not going to take the scale in are in my plan. And I know personally why I don't want to be taking the scale in, just plainly because I don't like scaling into a trade when I already have 1% risk on the table. So if I already have risk on the table, I'm not going to scale in until I totally risk free on my trades. So that's as far as my trades go for this week, and I hope you guys are all having a good week. So now we're gonna get off the charts, and I'm gonna give you a little bit of a message. So yeah. So guys and girls, thank you for staying this long on the video. This is actually now the end of the video. I just want to say to you guys, I appreciate you watching my videos, but it would be a huge favor if you did hit that subscribe button, and come on, at least get me some subscribers. This content is taking me a long time to produce and a long time to, sort it out to make it the best for you guys. So, and also I've been giving away a lot of free tips like analysis and everything. I might start doing more of that again, but I do have a content plan which I'm sticking to quite strictly. So there's more content coming out on Sunday and next week. So I hope you guys stay blessed. Also, I'm going to just show you guys my results for this week. It's on my computer. I think that's backward actually, because I'm using a selfie camera. But what it says, week three of this month. So it's US 30, my first trade, minus 1%. And by the way, this is in order. So number one, US 30 minus 1%. China 50 plus 3.65. Kiwi CAD minus 1%. Aussie 200 minus 1. Euro Yen minus 1. Brent crude plus 0.5. Euro Dollar plus 0.5. Euro Pound break even. Euro Kiwi plus 0.5. Aussie Dollar plus 0.5, and I've got natural gas running. So that leaves us with 1.64% locked in. So we're positive for the week, and we actually did have a losing streak of 3 trades. So that's kind of bad, minus 3% in a row. Obviously not enough to blow the account, and I would need 100 of them, but it's pretty impressive, plus 1.64% for the week. Not the best week considering the week I had last week, which was actually a very good week. And so yeah, I just want to share you guys my results for the week, and I hope you had a good week too. If you didn't, just stay strong, just back test, just refine your strategy and get your mindset together, because bad weeks can have a bad influence onto your psychology, and you might be doing things which you might have not done if you did have a good week. And also it's the same thing if you've had a really good week. Don't lose your head about it. Go back and review the trades, go back and journal it, and just document everything, and don't let wins and losses change the way you trade. So guys, thank you for watching this video, and I hope you took something into your own, took a few things from this video, such as what I mentioned when I was on the walk. Just filter out all the noise about social media and just put your head down and work on trading, work on the things you love, work on relationships, and just make a better life for yourself, because that is something you can control. And let's not focus on the things that we can't control. Be proactive, and yeah, just stay blessed guys. Thanks for watching this video.